Nigeria's tax landscape is undergoing a major shift with the overhaul of the capital gains tax regime set to take effect from 1st of January 2026. The changes replace the flat 10% rate with a progressive structure tied to income tax rates for individuals, align corporate CGT with corporate income tax, and widen the base to include indirect share transfers and assets considered to be located in Nigeria. These reforms aim to balance investor protection with revenue generation. Joining us now to break this down and with a passion for the markets, I said, we have the CEO of Financr WithMuktar in person of Muktar Mohammed. Thank you for joining us in the studio today.
It's good to be on studio with you today.
Yes, indeed. And I want to talk about what happened yesterday on the markets, but because a lot of people are tying it to the CGT tax. CGT, right? Capital gains taxation, and less of Trump. So let's provide a foundation for what this capital gains tax is and how it's affecting the markets at the moment.
Well, first of all, let's have clarity on why the market behaved what it will behave. Then we zero into the capital gain tax. Now, market response also to pronouncement, like you say, less Trump. Now, the less Trump has to do with when you look at the pronouncement from President Trump, you look at the areas that these were going to be affected. You look at the company that are listed in the exchange. There was no company that is listed in the Northeast and East, or there's no mining company that will be affected by that action. So definitely now, why is that affecting the market? Is coming from foreign investors' sentiment now. That, okay, if anything like aggression happens like this, it may have an effect on our inflow and outflow. So that is where, that's why it's not major. But if you look at it critically, it should be positive. If you're saying you're coming in to fight terrorists, you're coming in to reduce so that a lot of Nigerians can go to the farm again, then again the mining companies can begin to mine, then it should have been positive. But again, when you look at the larger picture, the Nigerian government is saying, we are a sovereign nation. Now, what really affects the market is the response.
The response?
The response from the presidency, from government officials. It was more or less like tick for tack, war for war. Oh, we are a sovereign nation. You could imagine if statement has come like, we are engaging them diplomatically, we are partner in this. That could cool down nerves and said, okay, it's not as you think it is, there's also an engagement, which they not did later on. So that's why I say, that's why I agree with you, less of Trump. Secondly, this period, ordinarily in the market, the Nigerian market, between October, November, and towards the middle of December, you have this slowdown in terms of investor portfolio reshuffling, moving from one equity to another, looking at the year end, looking at the fourth quarter result. Are you a dividend stock paying company? Are you looking at collecting dividend, or you are involved in capital appreciation? That is one.
So now, investors are not satisfied with what they've seen in that regard? Earnings and dividends?
That's what I'm saying, that whether the earnings is positive, investors begin to reshuffle their portfolio towards good entry price based on the third quarter results. So normally you see those swap in terms of mood. They were bearish, bullish. Now the main elephant in the house was the capital gain tax. Now, why is it that an issue? Number one, people are not saying they don't want to pay tax, but the recruitative nature of it, that if I've had this tax for 10 years, a company share for 10 years, and you want to start collecting capital gain tax from January based on that I was having it in 10 years, there was no clarity on that. That was what the market needed. They needed clarity. Will I be paying tax on that when I mean, from January 26 based on the increment, or will I be paying based on that I have this stock for 10 years and I'm trying to exit you and I'm calculating the capital gain tax since I've held the stock? That was a major chance. So a lot of investors were panic, and then they said, you know what, I sell off whatever I gain, I've gained so much, I'll sell off and come back in January so that you not start taxing me from January.
Right. Okay.
So there was no clarity. And that's why I said, when it comes to taxes, especially whether tax for the market or whatever, there need to be clarity on what you want to do. And that clarity is coming out. Now we're beginning to hear, no, it starts from 21st of, by the end of 31st of December. So whatever price it ends, let me say I bought a stock at 100 Naira. I mean, I bought a stock at, it gained to 100 Naira. And when I come in at January 1st, now the stock gained 15% and I want to go. So there's that 15% that you take your capital gain tax from. So that brings clarity to the market. That is one. Secondly, you're not telling us pension fund administrator, institutional investors will be exempted from this. Before now, what we heard was, oh, federal government bond, you don't pay tax. Nobody heard about, oh, as an investor, as an institutional investor, as a pension fund administrator, you'll be exempted from tax. Now, what about the foreign investors? How are these tax going to impact their inflow? Those are the clarity that the market needed for it to be, to move forward. And once those clarity came, just a message from the minister that said, we are here, we have heard you. You see what the market is responding positively this morning. To almost every equity that lost yesterday seems to be gradually having to recovery. But it has not gone to the recovery that it was before then. But again, the government should always come up with clear-cut policy when it comes to taxation. Taxation is key to any business. Whether you're a small business, whether you're listed on the exchange or not, you need to know, because tax evasion is a high crime. Nobody wants to be involved in tax evasion. But every businessman look for how to avoid paying higher tax, which is legal. So we look out for legal ways. So let us know, as an investor, what I tell my again, in best practice in global market, an investor, you are holding a share for 10 years, for 5 years. That shows that you have confidence, you are deep. You don't pay taxes when you're, but short-term players are being asked to pay high taxes because you are gaining, you are going in, you are going out. That is to discourage people. And the capital market itself is to build long-term wealth for your citizens, not just to think about revenue for the government.
Right.
So that, for me, is the challenge that the market went through yesterday.
So, speaking of clarity, what Wale Adun did say is that there will be a review of the CGT tax. As an investor, what needs to be reviewed?
Number one, I think when I say clarity, I've listened to the chairman of the Presidential Task Force, Tao Yodele, who was saying today in a program that I was in, talking about pension fund exempted, and also talking about the capital gains and other things, institutional investors, and saying that it is not going to, it's going to start 2025. It's not going, there's no backdating it to when you bought the share and everything. I think he brought out that clarity in the program today and in the tweet yesterday. That also could be the positivity. Now, if you ask me, what am I expecting as an investor? What do I expect the government to do? Number one, a child starts from crawling. The child, first of all, tries to succeed, then it starts to crawl, then it starts to walk. So if you are not paying tax before, and here we are, the first time you want us to pay tax is 30%, and it's too high. Let's have gradual increments. Let's see how it goes. So that, you see, Sub-Saharan Africa, we are the investment up because we are attractive. And one of those attractiveness also comes because of the companies that are listed. Not only that, also because of your tax-friendly environment. If you don't do that, they won't come. There are other economies that are fighting for those funds. And not now that we have been battling to stabilize exchange rate. We want to stabilize the exchange rate. And the only way we can stabilize it is to attract foreign inflow. And we are seeing that with the stability in the exchange rate. Because the stability in the exchange is not driven by what we earn in oil, because oil earnings have declined because of the budget benchmark of $75 to about $60. So you need to encourage that sector. You want to build $1 trillion economy. The first place you need to look at is the capital market. It's the barometer. It's where funds will come. It's where people have. You need to see how you can protect that market, make that market exciting for investors to come in. So those are what the government should be doing. The investors are not against paying of taxes. They want to pay tax, but come on, I've not paid before, and you're telling me to pay 30% of capital gain tax. Come on, we need to start gradually. Tax itself, like the chairman of the Tax Reform Fund said, it's not about revenue. He said that it's about how to protect investors, give investors more confidence. Then if you read about protecting investors, giving investors more confidence, then if it's not about revenue, that means you want to grow. You want to, tax are used to grow the economy and create wealth for your citizens. So how do you do that then? You need to come down. 30% for me is too much on the high side. Increase the benchmark also. You're not talking about 150 million alone. Come on, why can't somebody told me, say, tell them, why can't they do 1 billion? Well, from 1 billion, then you can start taxing us from there. So all these are what they should. And the major thing is that engage. Engagement is key. Don't go in there after passing it into law, and then you're not coming back to say, okay, let's engage. No, let's engage ourselves so that we are on a smooth seal. You are not just taking me unaware. And that is what is happening to the market. clarity, the market needs clarity, especially when it comes to taxation.
Right, and policy consistency is something that this administration
That's what I'm saying.
has struggled with. Right, go ahead.
Yes, they've struggled with that. Remember, petroleum tax was supposed to be implemented. He said it will go. Remember, petroleum tax, like I keep saying, it's not new. President Obasanjo started the petroleum tax. Remember, at that time, he dismantled all the toll gates. Said we'll start paying petroleum tax. And they revolted against it, and it was suspended. It was not cancelled. You came in, you said we'll start paying petroleum tax. You did not look at the FX market at that time. You did not look at the impact of petroleum tax on the general economy. Now you said, okay, that part will be suspended, pending when there is stability. So policy so you need to give clarity. You need to let investors have positivity in your word. When you said good morning, we should realize the government is saying good morning. Not when the government say good morning, we are saying they could say good afternoon the next time.
Yes, we have to go and check outside to see whether the sun is out. Now, they have said they're going to review this November 10. January 1st, January 2026 is just around the corner. Do you see them meeting up with this deadline, or do you see another pushing forward of a deadline?
Where I'm sitting, it will be hard to start implementation in January. I mean, again, look, whether you talk taxes is for the economy, but don't forget that we are going to an electoral year, electional year, and that's the politics side of it that may have to come and play through. We have seen that happen. Remember when President Buhari was there, he wanted to remove subsidy. He said no subsidy will not be removed till after 6 months, because at that time we're looking at the election. And from the election, we raised it up to when he was going. Before President Tinubu, when he came to power, had the God, because I'm just coming into power to remove the subsidy. So I still think that there's still room for us to have this, which I don't know why we are so much in a haste to do some things. Again, we had enough time, but they didn't engage. On time. Right. A lot of people are now shouting. That's where they are not trying to engage. I think if that engagement has started from the onset, then we wouldn't be where we are. We would have even started the implementation immediately. It was even agreed upon, gazetted. But you said, okay, you've passed it 6 months ago. You want to use 6 months to enlighten us on what we were not part of. That's the challenge.
So engagement, stakeholder engagement before the announcement.
Yeah, it's key.
December is a pretty much non-existent month for work and engagement. We'll see what happens, though, ahead of the January 2026 implementation date. But thank you so much for your time and perspective on the show today. CEO Finance with Muktar Mohammed.
Thank you.